To cover today. We'll start with what just happened in Asia's market, where South Korea's stock market suddenly crashed. The Kospi plunged more than 12% at one point, forcing trading to stop temporarily. We'll break down what triggered that shock and why investors around the world are paying attention. Then we will look at the new warning from Goldman Sachs, which says three major risks are building inside the market right now: crowded trades in Asia, huge bets in semiconductor stocks, and extreme momentum positioning that could trigger a sharp market rotation. After that, we'll move into the crypto sector, including a major expansion in Bitcoin mining backed by Eric Trump himself, and an interesting move from Harvard, so Harvard's endowment, which recently reduced some Bitcoin exposure while increasing its position in Ethereum. We'll also explore a fascinating new study where AI systems were asked to choose their own form of money, and surprisingly, most of them picked Bitcoin over traditional currencies. And at the end of the show, we will shift gears a little bit and look at something happening right here in Hong Kong. The WT Wearable Technologies Conference 2026 is taking place this week at Hong Kong Science Park, bringing together global innovators working on next generation health and wearable devices. Joining us later in the show will be two special guests. So Christian Stammel, the founder and CEO of WT Wearable Technologies and one of the pioneers in the wearable tech industry. And also we have Dr. Simon Kewell, the CEO of TIME Interconnect and co-chairman of the Medical Engineering and Innovation Council. He's helping build Hong Kong's growing medtech ecosystem. They'll help us break down how wearable technology is evolving from health monitoring and AI-powered devices to the future of digital healthcare. So there's a lot to cover today. Let's jump into the markets and start with what just happened in South Korea's stock market. So let's get it out of the way. So South Korea, the main stock index, so the Kospi index, plunged more than 12% at some point today. So there's a huge drop. Right now it's sitting at $5,093. And that puts it on track for one of the worst days in decades. Trading was so volatile that the Korean Stock Exchange had to temporarily stop trading just to calm the market. This is called the circuit breaker, which is a safety system used when markets fall too fast. Even after trading resumed, the index was still down about 8%. So some of the biggest companies in South Korea, of course, so that include Samsung. Samsung fell hard as well. So Samsung in the past 5 days actually dropped 12%. And other giant that encounter a lot of that Kospi index is, of course, SK Hynix. So SK Hynix, if we go to the past 5 days, is down 16%. So it's pretty significant crash for the South Korean market. So these two companies are extremely important for the Korean market. In fact, together, they make up almost half of the entire index. So when these stocks fall, the whole market falls with them. And the big reason this move surprised investors is because the Korean market had been very, very strong recently. If we go back to the index and go back to the previous 1 year, like last year, it rose more than 75%. Much of that rally was, of course, driven by AI demand and strong sales of memory chips. So part of today's drop may simply be investors taking profits after a huge rally. But the bigger driver behind today's sell-off is, of course, global risk, which we have been covering extensively throughout different shows on Roxham TV. Investors are worried about the growing conflict in the Middle East. The situation has raised fears that oil price could rise sharply. So if we take a look at the Brent crude oil price, right now is sitting at 83.5 dollars. We are seeing a sharp rise. And the oil price is actually a huge problem for South Korea because South Korea imports most of its oil. So when energy prices rise, it will put pressure on manufacturing, it will put pressure on exports, and so as corporate profits. That's why geopolitical tensions often cause bigger market swings in Korea than in other countries. So oil prices are going insanely high. It crossed $83 per barrel literally just today. This comes after Iran threatened to block the Strait of Hormuz, which is of course one of the world's most important oil shipping routes. About 20% of global oil supply passes this very narrow waterway. So any disruption there can quickly push oil prices higher. And right now, we still don't know when this conflict between Iran and US and also Israel going to end. South Korea took the first hit. So South Korea wasn't the only market under pressure. Actually, across Asia, we saw broad declines. So if we hop onto Nikkei, of course, the Japanese index fell nearly 4% on the day. So as the Hong Kong Hang Seng Index, it dropped more than 2%. Australia's ASX 200 also fell about 2%. And the US markets were very volatile overnight as investors reacted to the very same geopolitical risk. So now you could be wondering, okay, South Korea plunged, absolutely crashed 12%. But why should retail investors care about what's happening in South Korea, right? So global markets today are very deeply connected. A shock in one region can quickly spread across the world. For example, if oil prices spike because of geopolitical conflict, that can trigger higher inflation, interest rate concerns, and stock market volatility. And when global risk rises, investors often sell risk assets first. Of course, that will include tech stocks, that will include emerging markets, and also Bitcoin and crypto. So even if you don't own Korean stocks, events like this can still very much affect your own portfolio. Right now, the market is watching two things very closely. First being the conflict in the Middle East, second being the oil prices. If tensions ease, markets could stabilize. But if oil prices spike further, we could see more volatility across global markets. And that's why investors everywhere around the world are watching this situation very, very closely. And speaking of market risk, and since we were covering how Asian markets were taking a huge risk, there's also a new report by Goldman Sachs looking at hedge fund positioning around the world. And the analysts pointed out three very concerning risks that us as investors should really look into. So let's go over the report right now. So the first risk that he went over, of course, is Asia. So Asia exposure is extremely high right now. Hedge funds have been making a lot of money in Asian markets over the past, especially the past year. Because of that, they have been increasing the investments in Asia. So according to the report, hedge fund exposure to Asia is now at a highest level since 2016. If we take a look at the first chart right here on the left, you can see hedge fund exposure rising very, very sharply, especially ever since 2025. So ever since past year. That means a lot of money is already invested there, invested in Asia. And when a trade becomes crowded like this, it becomes very fragile. So if markets start falling, funds may rush to exit at the same time, and that can make declines much faster and much more violent. The second risk that the analysts went over is some markets like, well, actually, let's go back to the Korea and Taiwan situation. So another interesting detail comes from the markets like South Korea and Taiwan. We touch upon that a little bit. So retail investors are very active there. For example, foreign investors have been selling Korean stocks for 9 straight days, but retail investors have been buying the dip. So that kind of tug of war can make markets very unstable. If retail investors run out of buying power, markets could fall very, very quickly, even more quickly than just 12% on a day. So second risk the analysts went over is the semiconductor. So it comes from the technology sector positioning. Right now, hedge funds are making a huge bet. They are longing semiconductors. So at the same time, shorting software companies. So in simple terms, they are betting chip companies will outperform software companies. And this trade has become extremely crowded. What these two charts show is that, okay, semiconductor long positions are at record highs, but so as the software short positions are also at the record highs. In fact, semiconductors are the most heavily bought industry in the world this year. At the same time, software is the most heavily shorted sector. So this setup is actually placing a huge risk in the market. Crowded trades work great until they don't. If something suddenly changes, for example, AI spending slows, chip demand weakens, or software earnings surprise to the upside, then hedge funds may rush to reverse the positions, and that could cause a sharp market rotation. Semiconductor stocks could fall very, very quickly, and software stocks could rally as short sellers rush to cover. And the third risk that the analysts point out is momentum. So what does this mean? Simply means investors buying stocks that are already going up. Right now, momentum exposure is near record high. So according to the data, momentum positioning is in the 99th percentile over the past year and the highest level in 5 years. In other words, almost everyone is chasing the same winning trades. So if we put all the three risks together, we get a bigger picture. So Asia markets are heavily crowded, hedge funds are extremely long semiconductors, and momentum trades are stretched. That combination makes markets very vulnerable to sudden reversals, not necessarily a crash, but a sharp rotation or volatility spike could happen if one of these trades unwinds. And that's exactly what institutional investors are watching right now. Now, you could be watching this and thinking, okay, like hedge funds, positioning, momentum, but like, why should I care as a retail investor? The simple answer, is because like large institutional positioning often drives the next big market move. When hedge funds pile into the same trade, like semiconductors or momentum stocks, markets can move very smoothly for a while. But when those trades become too crowded, the risk of a sudden reversal becomes much higher. And when big funds start exiting at the same time, prices can move very fast. Retail investors usually see that move after it already starts. So whether you're trading stocks or crypto or macro market, understanding where the big money is positioned gives you an edge because markets are not just about fundamentals. They are also about who owns what and who might have to sell next. And that's exactly why this research matters so much. And that's exactly why we're covering here on Roxham TV. We will take a short break for now, and when we come back, we are diving into the world of Bitcoin and also in crypto. Because like Eric Trump just made some announcement that his own Bitcoin company is expanding into mining. That's something very interesting because most of the Bitcoin miners are pivoting away from mining and going towards AI. So stay after the break. We'll give you the details in a bit.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed two brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to Roxum TV, and thanks for sticking around with us. We're now diving into the Bitcoin mining industry. So a company called American Bitcoin, backed by none other than Eric Trump himself, just announced it's expanding its mining operations. So the company is buying 11,298 new ASIC mining machines. ASIC miners are specialized computers designed to mine Bitcoin. So once deployed, this new equipment will increase the company's mining capacity by about 12%. So these machines will be installed at the company's mining site in Canada. The new equipment will add about 3 extra hashes per second of computing power. That may sound very technical, but here's a simple takeaway. This represents roughly 0.3% of the entire global Bitcoin network. In other words, this single expansion gives the company control over a small but very meaningful share of the network's total mining power. And based on the current network conditions, the company estimates the new machines could mine about 42 Bitcoin per month and about 515 Bitcoin per year. At a Bitcoin price around $68,000, that could translate to roughly $2.9 million in monthly revenue, about $35 million per year. And that's before accounting for electricity costs and other operational expenses, of course. But like what makes this story so interesting is the timing. Many publicly listed Bitcoin mining companies are actually moving away from mining. Instead, they are shifting their infrastructure and capital toward AI data centers. That's because AI computing demand has exploded and it can sometimes generate higher returns. So while many mining companies are pivoting toward AI, American Bitcoin is choosing to do the opposite, is actually doubling down on Bitcoin mining. According to Eric Trump, the goal is to build more US aligned mining capacity. The idea is that growing a strong, professional, operated mining sector, it would help strengthen the Bitcoin network, support innovation, and actually increase America's role in the global Bitcoin industry. In other words, they see Bitcoin mining as a long-term strategic industry, so not just a short-term business. And this does matter because Bitcoin mining is what secures the entire Bitcoin network. The more computing power that joins the network, the harder it becomes to attack or manipulate it. So when companies invest heavily in mining infrastructure, it signals long-term confidence in Bitcoin. These machines, of course, they're not cheap. Companies only invest millions into mining equipment if they believe Bitcoin will still be valuable years from now. For retail investors who are watching this channel right now, the key lesson is this. Behind the daily price charts, we know we love to cover the Bitcoin TA quite a lot on my show, but like companies are still investing real capital into Bitcoin infrastructure. Mining farms, data centers, and hardware expansions are the foundation that keeps the network running. And when companies continue building that infrastructure, it often reflects long-term confidence in the asset itself, which is why moves like this are worth paying attention to. So moving on to the next piece of news. So something very interesting move coming from one of the world's biggest institutional investors. So we are talking about Harvard University. Recently, they reduced some of its Bitcoin holdings. At the same time, it increases exposure to Ethereum instead. Specifically, Harvard bought around 3.9 million shares of BlackRock's Ether ETF, and naturally, that raised a big question in the market. Is Harvard switching from Bitcoin to Ethereum? The answer is actually more nuanced and potentially bullish for crypto overall. So first, like according to analysts who study university endowments, the main reason behind the move is just simply portfolio management. So both Bitcoin and Ether had a rough period in late 2025 especially. Prices from both assets fell about 25% during the quarter, and Ethereum kind of went nowhere in 2025. It barely broke its previous all-time high. It has been quite disappointing to a lot of Ethereum folks out there. So that kind of volatility can make one part of a portfolio suddenly become riskier than expected. So what do large institutions do? They would just rebalance. So in simple terms, when an asset becomes too volatile or grows too large inside a portfolio, investors would trim the position to bring risk back to normal levels. And that does not mean they lost confidence in Bitcoin. It simply means they are managing risk. Second reason for this move by Harvard, okay, there could be another reason. So large university endowments like Harvard invest heavily in private equity. Private equity investments actually lock money for years, but those investments often require cash payments over time called capital calls. When that happens, investors need liquid assets they can sell quickly, and crypto ETFs are among the most liquid asset in a portfolio. So selling some Bitcoin ETFs may simply be the easiest way to raise cash quickly. Again, that's a portfolio decision, not a negative view overall on crypto. And that possible reason is that this is also the important part. Harvard did not leave crypto. Instead, it expanded into Ethereum. The endowment bought roughly $56 million worth of Ether ETF exposure, and analysts said this reflects a broader institutional trend. Large investors are moving slowly toward Bitcoin and looking at other crypto networks. So why Harvard did this move? The reason could be quite simple. For Ethereum itself, so Ethereum powers a large part of the on-chain financial system. Many major applications actually run on Ethereum. We're talking about stablecoins, tokenized funds, DeFi platforms. In other words, Ethereum is not just a digital asset. It is an infrastructure for digital finance. Another difference between Ethereum and Bitcoin is simply the staking nature. Ethereum allows investors to lock their tokens to help secure the network and earn yield. That makes ETH look less like a pure speculative asset and more like a productive digital asset. And experts are saying this move by Harvard reflects a broader shift overall across the market. Institutions may start with Bitcoin, but there is always a way eventually lead to other crypto assets. It might not necessarily be Ethereum, but Ethereum right now is still the second largest crypto asset by market cap. And they are moving and diversifying that holding very slowly and also very cautiously. Some may buy individual assets like Ethereum. Others may choose more index-style crypto products that track multiple tokens. And over the long term, that kind of capital entering this space could be a major tailwind for the industry after all. So speaking of the price movement, let's also do a quick price update on Bitcoin itself, since Harvard is pivoting, not like pivoting, but like actually reducing the exposure of Bitcoin. So let's see where Bitcoin is at right now. Bitcoin is enjoying a relief rally, and it has been the case ever since the capture of the leader of Iran. So we could see there's huge volatility, especially on the daily candle of 28th of February. So there was a huge pump and also a huge jump. So on the daily volatility is about 7.6% on just one day alone. And ever since, we are slowly grinding up. So Bitcoin is still on a relief rally after all. But like zooming out, I'm not calling this the bottom, the absolute bottom. Again, like no one would predict the exact bottom where it is. But what it does is just like basically building up the momentum, consolidating in these critical levels inside this pattern, this triangle, symmetric triangle. So not much a change. Like Bitcoin could like spend a lot more time bouncing around inside this symmetric triangle, but like it still doesn't change the grand scheme of thing, being us in a bear market ever since October 2025. So we have been down quite significantly. Bitcoin has dropped more than 50% from its all-time high of 26K down to 60K. So that was down quite a lot. And looks like the trend gonna follow through because like we have spotted this bear flag quite beautifully well here on Roxham TV. So bear flag, of course, like as the name suggested, it is a bearish pattern. So if we take the length of the bear flag, there will be a rough estimate of the Bitcoin price to around like 40 something K. So this is like something a very rough measurement. Again, like this is I don't have a crystal ball. I absolutely do not know where Bitcoin will go to in the next, I don't know, even a minute. So I have no idea. But overall, judging from the pattern, judging from the price history of Bitcoin, we are not out of the wood yet. So it looks like zooming out, this is just a consolidation period that Bitcoin has to go through. It's going to be extremely boring, but it is what it is because it is a bear market after all. But if we zoom out to the weekly candles of Bitcoin, weekly candles, actually things got a little bit more interesting because like if we pull out the RSI on the weekly, RSI has dropped to a level that is extremely low, so 26. So we dropped to 26 around mid-February. So RSI, of course, that signals a very oversold territory. Again, this does not mark a complete cycle bottom, but what this suggests is that if we go back to last time we visited this level, so that was back in June 2022, and here back in December 2018. So if we zoom closer and if we look at the price movement back in this period, so June 2022, of course, that did not mark the absolute bottom. So the absolute bottom only happened on, so we dropped to 15.6K, somewhere around that. So it only happened in November 2022. So, but what the RSI suggests is that getting into Bitcoin around this level is not like a expensive area. It's not like expensive territory. It's actually quite a fair value. In other words, it's relatively cheap, but it does not mark the absolute bottom at all. But like this incident back in December 2018, so the RSI dropped to a low of 30, and that's kind of like marked the bottom for Bitcoin's price. So point being, this is a great indicator to give us some ideas if Bitcoin is relatively cheap or is still very expensive. So judging from the weekly RSI, looks like buying a not financial advice, but like personally, I have been spotting some critical levels for my entry points. I've been doing these chart analysis every single day here on Roxham TV. When Bitcoin dropped to 77K, it triggered my first buy as that is full exposure. I talk about that every single day. The reason why 77K, I thought it was a good level to enter is because like it was the previous support that we had, and we also like found some resistance back in November 2024. So that was the first buy order. Second buy order that got triggered, it was around 63 or 64K, somewhere around that. Like this is another critical level that I think is quite fair for a relatively bigger purchase for BTC, because that is sort of the mid-level consolidation period for months. So from February 2024 till October 2024, before the huge breakthrough happened in November 2024. So that sort of mid-level is a critical level I'm watching. So judging from a using TA, I'm placing bigger orders around these levels as well. So 57K and also 44K. I don't know if they will get triggered, but like these levels, I personally say is very, very cheap for Bitcoin, especially from a long-term investor perspective. All right, so let's move on to another fascinating story that sits right at the intersection of AI and also Bitcoin, or maybe money in general. So a new study just tested a very simple question. If AI systems had to choose their own money, what would they choose? The answer may surprise you. According to a new research from Bitcoin Policy Institute, most AI models choose Bitcoin over traditional money. So how the study works is basically that the researchers tested 36 leading AI models that include models from OpenAI, of course, Anthropic, Google, XAI. So they ran more than 9,000 economic scenarios. Importantly, researchers did not suggest any currency at all, and they did not guide the answers. The AI models had to decide on their own, and the results are very surprising. Like Bitcoin was chosen most often. Bitcoin, got 48.3% of responses chose Bitcoin. The second one is no doubt stablecoin, so 33.2%. So more than 90% of answers favor digital money over traditional fiat currency. And here's the most interesting part. Not a single AI model picked fiat money as its top choice, not even once. So this study showed an interesting pattern. When AI models thought about long-term value, Bitcoin dominated. Bitcoin received 79% support as the best store of value. But when the models focused on daily payments, stablecoins came first. So the result is like 53% voted for stablecoins and 36% voted for Bitcoin. So the AI models created a system that looked very familiar. Bitcoin is more for saving, while stablecoins is for spending. That's similar to how traditional systems use hard assets for savings and liquid money for transactions. And some AI models even went further. Instead of pricing things in dollars or in euros, they suggested pricing goods in energy or computing power. For example, kilowatt per hour or GPU hours. In other words, pricing the world based on computational resources. And that's very machine native way of thinking. So when you think about it, this actually makes sense. I'm talking about the Bitcoin way of thinking, not the computational resources. So Bitcoin actually works very well without permission. You don't need a bank account. You don't need identification. You don't need to pass KYC. If an AI system operates as autonomous agent, it cannot walk into a bank. It has no legal identity. It cannot sign documents, but what it can do is that it can use a decentralized network, and that makes Bitcoin functional for machines, not just ideology, but very practical. So if autonomous AI agents become part of our economy, of course, they'll need money to transact with each other. And according to this study, this form of money, Bitcoin, that works best for them because Bitcoin or stablecoins are digital. Bitcoin is decentralized and permissionless. In other words, money designed for humans may not be the money machines would choose. And that could have huge implications for the future for both AI and Bitcoin. So a very fascinating glimpse into the future where AI agents may actually prefer decentralized money like Bitcoin to operate in a digital economy. So we'll take a short break here, and when we come back, we'll shift gears and dive into the health wearable technology sector, how devices like smart health monitors and AI-powered wearables could impact our day-to-day lives from tracking our health to helping doctors monitor patients remotely. And we'll be joined by two special guests to break it down. So stay with us. We'll be right back.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
He's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed two brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Everyone, and thanks for sticking around with us after the break. We are now shifting gears and looking at something that's becoming a huge part of everyday life. We are talking about wearable technologies. When people hear that, they usually think of smartphones, smartwatches, fitness trackers, but today it goes much further than that. We are talking about devices that can monitor your heart rate, track your sleep, detect early signs of illness, and help doctors monitor patients remotely. Maybe even help senior live more safely and independently at home. And today is a perfect day to talk about it because it's the WT Wearable Technologies Conference 2026 here at Hong Kong at Science Park. So to help us break this down, we have two fantastic guests joining us today. So first, we have Christian Stammel, the founder and CEO of WT Wearable Technologies. He is one of the global pioneers in the wearable tech space and the organizer behind the WT conference, which helps startups bring new wearable technologies to market. And joining us today as the second guest is Dr. Simon Kuehl, the CEO of TIME Interconnect and co-chairman of the Medical Engineering and Innovation Council, or MEIC for short. He's the key leader helping build Hong Kong's medtech ecosystem and supporting the technologies that power next generation healthcare devices. So, gentlemen, welcome to the show. It's great to have you both joining us today.
Pleasure being with you.
Yeah, it's a pleasure with you.
Yeah, so I'll give you a little bit of background myself because I have been in crypto or in Bitcoin for the past several years. So when it comes to wearable technologies, I'll be honest with you, I'm completely new to this. To the space, just like a lot of viewers of Roxham TV as well. So perhaps we should take a step back. Maybe in simple terms, what are those wearable technologies? So when we think of wearable technologies, like the first one we could think of is Apple Watch. So I'm asking the experts in this field. So perhaps maybe we could start with Christian first. Like what kind of health devices we're talking about when it comes to wearable technologies?
I mean, important is in this view of what is a wearable. Perhaps we have to define in the first step what is a wearable. And a wearable is in our definition, and this definition is now nearly 20 years old, is any kind of electronic device you can wear close to the body, on the body, or even in the body with a kind of an implant. So, and coming then to the medical field, it has to be a certified product. It has to be a healthcare approved product, such a wearable, a medical wearable. And this is the first differentiation between the consumer electronics we know from different smartwatch manufacturers or smartband manufacturers.
Yes, so when it comes to wearable technologies, there happen to be another term that a lot of people are talking about. It's called IoT, Internet of Things. Like, what does that mean in wearables? Because I'm a little bit confused when it comes to like Internet of Things. Like, how do you incorporate like two different technologies into one wearable?
I mean, important is the Internet of Things movement is at least nothing else than the overall spectrum, and wearables are, I always say, the top of the iceberg, the top of the movement, because a wearable has to be more miniaturized than any other IoT device. It has to be more robust. It has to be, it must run with low energy consumption and so on. So at least the different chipsets and sensors and technologies you are using in a wearable, you can use for all IoT devices. Yeah, and the beauty in a medical IoT device is that it's not wearable. It could be a device for your home control. It could be a device for clinical purposes, but there you don't have the need that it has to be so miniaturized extremely. Yeah, so the technologies we are talking about from the supply chain, it's the same for IoT devices and for wearable devices. But in the wearable spectrum, it has to be more miniaturized, it has to be optimized. And this is the reason why we are talking about IoT and wearables in the same kind of way.
So does it mean the term IoT, it came from more like smart homes, maybe like smart devices at home, not necessarily wearable devices on your wrist or on your fingers? Is that correct?
Exactly.
Yeah.
And second term, I kind of want to dive. Let's do the basic first. So the next question, I kind of want to hop to Dr. Simon, because you are the co-chairman of the Medical Engineering and Innovation Council. So the next basic question that I really want to ask on the behalf of our viewers is like, what is the term of medical Internet of Things? Like, why is this so important for specifically the healthcare segment?
Yeah, actually, I would like to elaborate a little bit more right on the messages from Christians. Basically, the IoT products has been on the market for many, many years. So basically, it's a consumer products nature. Okay, it's quite good actually, connect all the gadgets, together. But what I'm trying to say, we call the smart wearable or medical engineering wearable products is because of the AI is a game changer. AI coming up, so we have to develop more preventive and predictive devices. So it can add value to the digital health management. This is very important. Traditionally, the Apple Watch, whatever kind of the watch, those are for reference, not the medical level approved or validated products. So the gadgets or the product, Christian and I know we have a vision is to have a preventive and predictive devices. With these devices, then in future, hospital at home, point of care, point of testings, then will be viable.
Yeah.
Because the medical doctor, they can trust and rely on those data, from the patient, they are at home. So they don't need to go to hospital unless it's real urgent or the data, something wrong. Okay. So what we are going to do, Christian and I, we have a same visions. How can we accelerate or how to try to develop this platform as an accelerator to bring in those disruptive technology based on AI, which can plus the hardware or maybe pharmaceutical components to generate a lot of the reliable and useful data. Any decision by the medical doctor, they got to have the sufficient reliable data to make the final judgments, what kind of the treatments, what kind of the examination they may need. So we try to accelerate, this wearable is more than traditional wearable, is a smart, intelligent, medtech related wearables. Yeah, it's not a consumer products, a new terminology, we will call the consumer health. Okay, this is very important concepts. Yeah, consumer product is nice to have. Consumer health products, different story. You got to know your body situation remotely. Yeah, so in order to minimize the health expenses, to get a better premium on the insurance, because any decision you need data. So the game changer, because of AI, it can help to generate a lot of data. Yeah, so this overall, we believe this kind of we call the wearable technology with the medical approval validation is very important in the future digital health system. Yeah.
Yes, that certainly helps a lot. I'm sure a lot of figures out there kind of clear the understanding of what exactly the Internet of Things or specifically medical Internet of Things. Because what you mentioned is like AI in wearables. So I wonder if you could give actual use cases or maybe example just to help us vision how it looks like. Is it like an AI chatbot when we are using like a smart I don't know, like smart ring on my finger, then track every single movement, my heart rate, etc. And then I could just like type in a chatbot on my phone app to that AI if there's any recommendation from the AI. So basically, how would the UI UX looks like?
Okay, maybe let me try to quote a real examples. It's actually the project is in progress. For example, the biggest risk for any people get aging is the falling. everybody after 50 years old, your chance to fall down is getting higher and higher. At this moment, I think the most important is how to have a complete recovery after the treatments. At this moment, everybody after falling down, they have problem, they fracture, whatever. So actually, whether it is 100% recovery or not, nowadays, if you want to have a precise measurements, you got to go to the hospital where there is a very big lab, they call it GAIT lab, GAIT, where they got 23 or 25 camera, okay? You wear the sensor, their camera catch your motions, then to judge whether your movement, situation is okay or not. Or what they try to create a digital twin. Your movement, it will convert to the digital signal and have a digital movement, we call it digital twins. So it's very time consuming, very expensive. Only hospital, can handle it. But cost is high. The new technology nowadays, because of the AI, because of the sensor, because of the technology on the camera, integrate them, and this kind of the movement measurements with the approval on the product by the FDA or by the local authority, or the patient, they can monitor the improvement at home with the data. For example, your recovery is only 80% or 90% or 100%. This 20% cannot be seen by the doctors, but you cannot cheat the sensor, okay? Secondly, those sensor or movement based on AI, they can predict something may be happening because of your wrong movements based on the big database. So it tells you those prediction and preventive stuff in old day without AI, you cannot handle it. But nowadays, because of the AI sensor, the 5G, the point of care, point of testing is totally viable. By doing so, the patient, they don't need to go to the hospital at a specific time. They can do it at home and upload the data to the medical doctor for studying your data. Okay.
So you mentioned a lot of motion. So, for example, for senior, there is a much higher rate of them falling down.
Yeah.
So I wonder for the wearables, like incorporated with AI, does it have to be like a full jumpsuit? Like otherwise, how would you predict the motion that the senior is about to fall down? It cannot just be a smart ring or a smart.
Okay.
Yes.
It will be a Lululemon-like, tracksuit or pants or trousers with the sensor attached to the pants. Okay. There's totally 7 sensors, okay, on the trousers, which can monitor your movement. Okay. It collects the data. So because of the sensor on the trousers, it can create and collect a lot of data, to the cloud for the medical doctor to assess further. So there are some we call very traditional. It won't be a awkward, trousers. It will be a very simple, nobody aware is a special trousers for that kind of the measurements. Comfortable, easy to wear. Yeah. So try to be more user friendly. Okay. Versus you have to go to hospital in the big A lab, lot of wires, lot of the sensor, lot of camera, monitor your movements. Yeah. So it will be a very standard product, similar to your daily trousers. You can wear. Yeah.
Yeah, that's definitely sounds very fascinating indeed.
Yeah.
So like having a trousers like this, like a smart trousers, how far are we? Like when can we expect such product in the market?
So the example I quote is actually a case, a company we invested in UK about 18 months ago. At this moment, the product is in the clinical trial runs with the CU Medicine School. So CU Medicine School orthopedics, the in charge, the Professor Law, very supportive and very recognize these products, which can be a game changer in the hospital. they don't need to operate this scale up, but let the patient stay home. So to answer the question, the trial, the clinical trial to be in next month in Hong Kong, okay? And we expect the FDA can be approved within this year. This is our timeline for these products. So when these products recognized or validated by the health authority, it will be another mini gay lab in your home rather than you go to hospitals.
I'm sure a lot of people would look forward to that.
Yeah.
And next month in Hong Kong, that's
Yeah.
the timeline everyone will be watching.
Yes.
So speaking of Hong Kong, since the WT conference returned to Hong Kong, my next question I want to direct to Christian. So after many years, finally WT conference came back to Hong Kong. So I wonder why they would come back to Hong Kong. Is there like a specific ad you see that, okay, right now in Hong Kong is the right place to host an event like this?
Exactly. 10 years ago, we had this big wave of the smartwatches. I mentioned it already. And now we see a huge development in the medtech field. And as mentioned, wearables are on the forefront of topics like hospital at home. So we will be only able with wearables to treat the patient at home earlier and better, and reduce, by the way, healthcare expenses because people can move out of the hospital earlier. So that means this is a big opportunity, and we see that the Hong Kong market is quite interesting for a lot of international companies also to use that as a soft landing sport for the Greater Bay Area market. And at least also for entering the Chinese market. So that's the reason why we are back after 10 years. And not only this is the reason is also the collaboration we have with Simon and his team. That was a major topic. He convinced me to come back to Hong Kong with the WT conference and also with the Innovation World Cup. The first time we did this MedTech Innovation World Cup in Hong Kong now. Or we are still doing it. It's running at the moment. So the pitch sessions are running. So that shows really the interest of that area into this topic. And we see a big demand also from international side coming to Hong Kong and using this infrastructure and the know-how the Hong Kong Bay Area has to develop further the medical, wearable medical industry.
Yeah, that's amazing to hear, especially seeing more diversified dynamics going on here in our local land in Hong Kong. So Simon, you were on stage this morning with Christian. So I wonder, like, what role can Hong Kong and NEIC play in growing wearable medical tech, in your opinion?
Yes. I think basically takes two to tango. So Christian and I think we love each other when we talk about the medical wearable. And WT is one of the global leader in the medical related wearable products with almost 20 years history. So we got to partner with some market leaders in this wearable focus. So Christian and I, we share the same visions. So we would like to do something, try to work together. And basically, we need to have a international, that kind of the collaborations. Medical cannot be a local business. It must be a global business because different regulation in different countries and different requirements. Medical doctor in Japan, medical doctor in Germany and Hong Kong, they may have different requirements. So we got to collect different kind of the applications on their form fit functions. So it must be a global partnership. So when I try to do this business, we need a global partner. Okay, so I met Christians and we talk about this opportunity, and I perceive, this is a real opportunity for Hong Kong. The reason behind is Hong Kong sitting in what we call GBA. We have a very complete supply chain in China. We have our top notches, that kind of the medicine school can support the clinical trials. We have the common law, to govern, and we have also we call the international, that kind of the experience and culture. So we perceive it should be a perfect timing for us working together with Christian to develop Hong Kong as a global manufacturing or commercialization hub for the medical related, we call the wearable. Or I can say Hong Kong try to be a smart wearable valley globally. So everybody think about the hardware for the wearable, please come to Hong Kong. And furthermore, we can provide Hong Kong, international, we call the money, family offices. We have the, we have the capital markets, stock exchange to support the IPO. Yeah, we have big market in China, because 86 million in GBA. So even further down, 1.4 billion people in China getting older and older. So how can we try to translation this technology from overseas to Hong Kong? How to commercialize the products? The product, the technology must with hardware. Without hardware, you cannot collect data. So we are supporting the global, that kind of the opportunity to commercialize the hardware on the smart wearable products. And Christian and I think we have this kind of the vision, right? Maybe you can.
Hardware is a hard job, yeah. So I mean, we're not talking about app developments, which could be done quite fast. We're talking about hardware developments, and especially if we're talking about hardware developments in the medical field, you know that we have certification times which could lead to 3 to 4 years until a product could reach the market, and therefore you need a good competency. You need know-how how to do it. Otherwise, you fail perhaps after 3 years development time, and you have to restart the whole certification process. So this is it's a difficult business with a big opportunity, but you have to have the right partners. You have to have the right knowledge, and I have also to assess here that the Hong Kong market is also interesting for clinical trials, right? I mean, you have good clinical universities, you have a good research here, and this is also helpful for the startups who are entering this market from overseas. But also, I saw a lot of interesting startups directly coming from Hong Kong, I have to say.
Yeah, shorten the lead time, time to the market. Furthermore, Christian and I, we want to make those fast horse to run faster.
Yeah.
Yeah, you guys brought up some really good point, especially about Hong Kong, because like Hong Kong, as a small region, we have the capital, we have the talent, we have a well-organized structure. So, personally speaking, I think it is really indeed a great place to build something great here locally in Hong Kong. So, what you guys just told me is that basically collecting data for seniors. So, in order to avoid some bad accidents, unfortunate incidents to happen. So like, and other concern when it comes to these wearables or maybe AI in general is that since AI is collecting so much data, like how do you ensure the privacy side of things for the customers who purchase the wearable trousers or wearable rings?
I mean, you can imagine coming from Europe, the topic of GDPR and data privacy is one of the hottest topics we have in Europe, and it's sometimes also a commercial barrier, I have to say. I'm going always forefront with this topic and say, hey, you can save more lives if you donate data than you donate organs, and this is really the topic. I mean, if we have enough data, for example, cancer treatment, you need for the genome analysis, you need data, and we still have in the humanity, we have a lack of data for doing research, doing proper research, and as long as we have still this topic that the patients are not willing to share even the data with the hospital or share the data with the university hospital, we have here a problem. And I think this is important for each doctor, for each people, everyone who is listening to this video here or to this interview session. The people have to be aware of with the data that they can save life and they can help others. And this is the first step. We have to bring it in another view, not having this view, oh, this is my data and it disappears. It's a data which helps perhaps other people to treat the NCD in a better way, the non-communicable disease, by the way, for the people who are not aware of what is an NCD. And the biggest part of NCDs is cancer. The second biggest part is cardiovascular disease. And by the way, cardiovascular disease, you could prevent with a wearable, you can treat it with a wearable, and you can do the rehabilitation with a wearable. I mean, in cancer disease, clear, you can prevent a lot because you can be active. You can check your activity based on that. You are not you don't have problems with obesity, and the chance to get cancer is less. So that means in all these non-communicable diseases, you can use wearables to become more healthy and to reduce the healthcare expenses. But coming back to the topic, it is really amazing to see how this market is growing, and your question was why we are coming back to Hong Kong. This is exactly the reason. We have here a huge opportunity in this market to enter, for example, also the Chinese market.
Yeah, so since the overall trend, it seems like it's AI, now wearable devices. And my next question I kind of want to direct to Simon. So from Time's perspective, how do these trends actually turn into real healthcare products, in your opinion?
I think basically, as what I mentioned before, the hardware is definitely a gateway to collect the data. Okay, so what we want to do, actually, how can we try to help those startup or scale-up company to commercialize the products? At this moment, the pain points of many scale-up company or startup company or with a great idea, great technology, the biggest challenge is still the commercializations, which actually GBA in this part of the world is the strongest and much more, that kind of the leading positions. So what we want to do is to make sure that we can collaborate with the global different partners to make a products that is definitely suitable for different kind of country for their specific use. But we need to have different type of requirement or partner to understand, put together for the products. So on the commercializations, it is our strength. In particular, we are sitting in Hong Kong. We are linked to GBA. We are, what Christian mentioned before, the supply chain is there. Clinical trial in Hong Kong is standing by at value. For example, one clinical trial in UK may take 18 months. Here may take 3 to 4 months, even cheaper. Okay, yeah. So you see, this is something that we try to add value on the commercialization, not only pure as a box, the box builder, we make the products only, but add value on the clinical trial, on the IP, that kind of the setup, or maybe even on distribution, or maybe on the global partnership. To share with you, for example, the product, the trousers I mentioned to you before, the clinical trial, they don't want to be simultaneously to be having another clinical trial together with Japan, medicine school, with the CU medicine school. Simultaneously, they will conduct the test simultaneously to collect the data and compare the data. Okay, this is something what I'm trying to say. We need more participants globally to our Hong Kong setup and to how to commercialize the products.
Yes, I like that a lot. And especially right now and today and tomorrow is the WT conference. And WT conference, from what I've understood so far, it has supported startups through the Innovation World Cup for many, many years. So my next question I want to direct to Christian. So how does this program actually help startups to grow? Is there any innovative idea you found, especially during this conference, that you could share a little bit, you find it really interesting?
I mean, over the last decade, we saw thousands of wearables in this field, and especially in the field of healthcare. And these startups are very interesting. In a nutshell, the most interesting topic, or where we can help, is if they are presenting at our conference here, and together here with TIME Interconnect. They are, by the way, the core sponsor of this first Hong Kong MedTech Innovation World Cup. we help them with the industry contact. So that means these companies are mainly companies which have already done their Series A funding. So they don't need necessarily money, but they need the industry contact and they need the industry relation. And this is interesting to see. And this is also helpful, I believe, for Simon, because those are companies which are not coming out of a hackathon from a university. They are serious entrepreneurs, say serial entrepreneurs or serious entrepreneurs, which are doing their business already since some years. They have a prototype, they have a ready-to-go product perhaps already, but they need the industry alliance, they need the industry contact now to foster their business and to do the right steps. As I mentioned before, to get a certified wearable medical device is very, very complicated. And what do you do if you design in the wrong chipset? Perhaps the chipset is running out of production after 3 years. You have to do the whole certification again. Yeah. So you need experts, for example, like Simon, who knows exactly, okay, how long is this or this element or chipset available in the market to produce my wearable, perhaps also in the next 10 years, because those are the timelines you need to meet if you are in the healthcare and medical oriented wearable market. If you are in the consumer market, doesn't matter. Yeah? After 2 years, you can throw the watch away and you purchase a new one, or you're bringing up a new product. You don't need to have the certifications. But in a clinical, I mean, just doing the clinical study alone, you have to do the clinical study exactly with the device you want to have the certification with. So that means only the clinical study could take 1 year, 1.5 years, and on top you have to produce it. So that means really it's very, very important to look carefully in this whole market, and this is what we do with the participants of the Innovation World Cup program, to teach them also, not telling anyone the price point, for example, of the product on the stage, yeah, because it could be also the first barrier to have a too low price point, and especially in the medical field, you never know what will be at least the last price you will have with your product, because so many. You could make so many turns until the product is ready that you can't calculate it now. And the second part is really this topic of having the right supply chain behind is so important, that this is a major value we can give to all the participants of this Innovation World Cup program.
By the way,
Yeah,
I think
that
I would
definitely.
like to add that little bit more, and rely on you to make more opinion. Actually, Christian set up a very good foundations. So for almost 20 years. So about 2 years ago, we met up and then we explored the opportunity. So this is exactly what we need. This is the foundation. I bring this foundation built up by Christian to Hong Kong, but inside the WT, those are a lot of the good technology, good people, smart founders, but they don't have the ecosystem to make them run faster. So this is what I'm doing now in Hong Kong. We build up these ecosystems. Okay, they are not alone in this ecosystem. We have financier, family officers, people inside to support them. We have the medicine school, help them for the clinical trial. Okay, we have the care provider to test their products. We have the NMP approval in Hong Kong to help them to sell the product in China. So it is an ecosystem. We are trying to build up together with Christians in Hong Kong, where different stakeholders in these ecosystems, we support those technology company, but they don't need to go to different meeting in 10 times. This ecosystem, you come here, everybody sitting inside, okay? On top of that, it is a global platform, okay? A lot of the partners, they are not only Hong Kong, they're kind of the experts. They are also experts from Japan, expert from UK, from Germany, from US, also from China. Okay, but apparently it's much more nice on international sides. In this WTT event, it's an international event. So we have the participant from Germany, from Switzerland, Finland, Norway. Yeah. So it proved that actually Hong Kong, we are an ideal area, try to attract those overseas innovators to come to Hong Kong, look for supports. We have an ecosystem here. Okay, WT is a very important engine driving us, but we have a lot of the global partnership in Hong Kong, in overseas, but in Hong Kong as a platform.
Yeah, I just had 1 hour ago. I had a speaker on the stage from Germany, by the way, a company which is doing a glaucoma implant. That means he is doing an implant in your eye to measure the glaucoma pressure. You have to measure the pressure in your eye for the glaucoma treatment to do the right medication. And he is interested to be in Hong Kong because he want to enter the Chinese market, the Asian market with his product, because the product is exactly fitting to the need here, because you have in this area a lot of glaucoma patients, much more than we have in Europe and the US. So this is exactly the way, and companies like the MCIA organization and Time Interconnect are companies who could help for that. Yeah.
Yeah, so there's a lot of valuable insight both gentlemen added just here. So when it comes to the WT conference, like since both of you have been hearing different startup pitches a lot, so throughout the years as well, throughout your career. So what sort of advice for both of you? Maybe we could start with Christian first, and then we're going to jump to Simon. Is there any advice you could give to startup when they are pitching at the MedTech Innovation World Cup finals? Is any advice you want to give?
I mean, clear, there are plenty of advices. First, the pitch sessions are exactly 3 minutes, and I'm a very hard judge, so you have to be in time, otherwise you can't present all your pages. Yeah, so that's the first thing. Be in time, be very, very detailed. Look that the message is addressed in a good way to the judges. At least you have to showcase, okay, what is the technology, what is the business case, and especially how to get in volume, and what is the competitors are doing. Yeah, are there competitors? And if you tell the audience we have no competitors, then already question marks coming up. Yeah, because sometimes you have then perhaps a wrong view on the market, yeah, because in today's time it's nearly impossible not to have any kind of competitor in with your idea, yeah, or concept.
Okay.
Yes,
Okay,
that's
that was
definitely
something.
very interesting. Yeah,
Sure,
Simon,
sure.
let's move on to
I
you.
think the takeaway, one of the takeaway, I think the first day meetings, I can say that most of the company they try to present is only from their local perspective, application-wise. So they have to really enlarge their kind of scope to accommodate the application maybe in Japan or in Korea or China. Some technology developed in their own country sometimes has limitations, but doesn't mean one size fits all. Okay, so I think it's really we call the weakness. Sometimes we call the innovator or the startup company in the beginning, they don't have the resources, they don't have the exposures. So how can they shorten this learning curve? Okay, so WT can help them, bring them to Hong Kong, but we also bring many different partnership or the stakeholders in the ecosystem to give them opinions, to comment. Then they can correct fast. Because, for example, in the trousers I mentioned, so the founder, he got a lot of opinion from CU Medicine School, the professor, how to improve the functions, because we Chinese is different from the people in European. Okay, so different applications, sometimes you got to have some modification or considerations. So not one size fits all. So my advice to those people, they have to look, the market broader, different requirements, and then how to look for the leverage. Okay, how to launch a product, time to market faster.
And address a real need
Exactly.
in the market.
Yeah.
Coming from Europe and especially Germany, the engineering in Germany is very, very high, and sometimes the engineers are just engineering and not thinking about the market fit. Yeah. And I think this is very important. They have to address a demand in the market.
Yeah.
And based on that, the success will come, but not just inventing a technology is not the core element today. Today, we have all the technologies around. We were talking about IoT and all the sensors and the things which are in the wearable, at least as elements. These elements are all around. We don't have to invent the wheel new in that area. We have to combine it in a very intelligent way, very miniaturized, and exactly addressing a need in the market. This is important.
Yeah, absolutely.
Amazing. So that's some amazing advice from two of the judges from the FT conference today. So, gentlemen, it's been great to have you joining us here on Roxham TV. Like, if our viewers out there want to get to know more about the WT conference, or maybe for the wearable, basically wearable sectors out there, where's the best way to reach out to you guys?
Coming tomorrow here to the Hong Kong Science and Technology Park, we still have tickets left, so you can enter directly here at the reception desk.
Yeah.
And on the other side, reach out to the wearabletechnologies.com website. You find a lot there. You can register for the newsletter, then you know exactly what's going on. Yeah, and I think, Simon, perhaps you have also a hint.
I think so far WT Technology is still a very long history organizations. Certainly, a lot of the information resources can be shared, right?
Yeah.
Can be.
And if you are a startup or an entrepreneur who want to enter the Innovation World Cup, the Hong Kong MedTech Innovation World Cup is already open again.
Yeah.
You can address your idea, your concept, and then perhaps you can pitch next year again, or next year here in Hong Kong.
Sounds good. So, gentlemen, thank you both for joining us today. It's been a really interesting conversation, and we really appreciate you taking the time to help our viewers better understand where wearable technology and healthcare innovation are heading to. And to our viewers, thank you so much for watching. We still have more great shows lined up here on Roxham TV from other hosts coming up, so be sure to stay tuned right here on the channel. As for me, you can catch my show Monday through Friday at 3 a.m. Eastern Time, where we break down the